After doing over 100 tax returns, I kept seeing the same mistakes costing people thousands of pounds, even when they thought that they'd done everything right. So today I'm going to show you exactly what I discovered, why no one's talking about this, and how easy it is for you to fix these mistakes. So if you're submitting a tax return this year, then this could save you a heap of cash and stop you from getting it wrong again. Now you might be sitting there thinking, is there something that HMRC is hiding from me? Well, maybe not on purpose, but the truth is there are rules buried in their guidelines that most people and even some accountants completely miss. Like this one. If you're doing any work in your own home, using your own laptop, and sipping on your own cup of tea, that's a business environment, and you can claim a portion of that. Your rent, electric, phone bill, even a part of your broadband. But most people either don't claim it or claim a tiny flat rate that's worth absolute peanuts. That's the thing. HMRC won't exactly tell you this, but it's there if you know where to look. When you start adding up all the missed claims over the course of a whole year, you start to see the real cost of not knowing the rules. Before we jump into the main content of the video, if you're looking to find out how much tax you're overpaying, then you can take my 60-second quiz using the link below. Most people are running six-figure businesses with a £1 tax out, which is crazy because I've seen it over and over again. Last week, I spoke to someone who is making £6,000 a month running their own business. They've been self-employed for over 2 years. No limited company, no accountant, and no structure. Just invoices, a spreadsheet, and a dream. Now, this either sounds completely mental to you, or it's the exact same situation that you're in. I'd be lying if I said that this is a one-off, because it's really not. There's so many other people with the same issue. Most people don't set up a limited company until they're well into the 60 to 100k income range. But by then, it's almost too late. You've already given away thousands more than you should have to the tax man, and for no reason at all. And if you think HMRC is going to ring you up and say, hey mate, do you want to open a company and pay less tax? There's absolutely no chance. They'll take the extra tax with a big smile on their face. Let's say you have a restaurant. Staying as a sole trader would be like trying to run this restaurant out of your home kitchen. Yeah, it'll probably work for a bit, but the moment things start to heat up, you'll be earning way less money than you should be. And after doing 100 tax returns, I kept seeing the same thing. People waiting way too long to set up a limited company. As soon as your profits are getting over £30,000 a year, a limited company could be a great way to legally save yourself thousands of pounds in tax. One of the main benefits of operating with a limited company is that you can choose how to pay yourself, which I'll go into detail later on in the video. It's not dodgy and it's not complicated. It's just using the tools that HMRC themselves have made available. So if you're still running your business as a sole trader when you're earning serious money, you might as well be keeping cash under your mattress whilst all your mates are using banking apps. Let's go back to having the restaurant. Imagine you've got a night full of bookings, but you've got no food to cook. When you go to the supermarket to buy your ingredients, would you only go down one of the aisles? Probably not, right? Because it means that you're going to be missing out on 90% of what's actually there. Well, this is the thing about claiming for expenses on your tax return. You'd be surprised about how many people I speak to that are just claiming for the basics. Or even worse, they're worried about claiming for things. But the thing is, you're actually missing out on 90% of what's available to you. If it's for your business, HMRC expects you to claim for it. You just need to know what counts and what you can get away with without being questioned. I had a client the other day that sent me over their expenses, and all that was on there was a laptop, a few train tickets, and some printer ink. That was it. They thought claiming anything else would be risky or seen as cheeky or pushing it. But that mindset is what's really costing you thousands. When it comes to claiming expenses for your business, HMRC actually doesn't care what you put through, as long as it's wholly and exclusively for your business. That's their own wording, and it includes much more than most people realize. If you spend money mainly to run or grow your business, there's a good chance that you can claim it. Some of the things that I've helped people claim for are travel to clients, meetings or events, their mobile phone bill, software subscriptions that they use for work, even training courses to improve their skills. One client was using Canva, Excel and Zoom every single day, but they were paying out of their own pocket and not claiming for any of it. Most people are claiming far too little on the return in fear of what might happen if they get something wrong, or they're listening to what their mate told them down the pub, or what they saw Brenda comment on a Facebook post. If you're looking for legal ways to pay less tax, then you will love my daily emails. I'm giving away 30 ways in 30 days for you to slash your own tax bill completely for free. You can sign up using the link in the description box. Most business owners pay themselves completely wrong. When I ask my clients how they take money out of their business, and they say to me, oh, well, I just transfer it to my personal account when I need it, this is a massive red flag, and they've got no idea what they're doing to the tax bill. Let's go back to having the restaurant again. Let's say that you've got all of the ingredients that you need for your big night of bookings. But before the food gets served to the customer, you go around and you eat a little bit from each of the plates. But by the end of the night, no one's got what they've paid for, and you've got some very angry customers. This is exactly what it's like pulling money out of your business without a plan or structure. It gets messy really fast, and it's an expensive mistake to make. After doing 100 tax returns, I found the system that works for most small business owners, especially if they're using a limited company. So here's what I recommend. First, you want to pay yourself a small salary, just enough to make use of the tax-free personal allowance and get national insurance credits towards your state pension. Then you want to top up your pay with dividends. These are taxed at much lower rates than salary, so you keep more money in your pocket rather than giving it to the taxman. You can also use a director's loan account to take money out of the business in the short term, which can be really handy if you're waiting on a big invoice to be paid from a customer and you need cash now. It's also a good idea to leave some profit in the company. This will allow you to invest in better tools, staff, or just give you a buffer for emergencies. If I'm honest, there's nothing really fancy about this. It's just about treating your business like a business and paying yourself like a business owner. If you're just taking money out as and when, you're not really in control, you're just reacting. But when you have a proper system, you stay tax efficient, build stability, and remove the last minute money transfer panic from your life. It's the difference between snacking on the food before it goes out versus serving a proper meal you actually planned for. But what if your biggest tax mistake wasn't a number, but a mindset? Most business owners aren't overpaying in tax because they're lazy. They're overpaying because they're too busy trying to survive rather than thinking long term. After doing 100 tax returns, I realized that the owners that grew the fastest weren't the ones that were making the most money. They were the ones who reinvested, hired help, and had their setup sorted early. They weren't reacting to tax bills, they were making smart moves to plan for them. Go back in the restaurant and from day one, you're the one cooking, serving, cleaning, and running the till. It's absolute chaos. You're busy, but you're not actually building anything. What would be the first thing that you do? Well, you'd get some help. You'd hire a chef, a waiter, a cleaner, someone to be front of house. This will then allow you to take a step back and actually work on the business. And suddenly, you're not just serving meals anymore. You're running a business with huge momentum. This is what good tax planning does. It clears space so you can grow. When you pay less tax legally by using the rules properly, you get more breathing room and everything else feels easier. You stop firefighting and you start building something long term. Tax isn't just about spreadsheets, it's about building a business that works, even when you're not in the kitchen. Don't forget, if you're looking for 30 ways in 30 days to slash your own tax bill completely legally and completely for free, then sign up with the link in the description box. And if you are still self-employed and you have a tax return to submit this year, then I've made this full walkthrough tutorial on how to complete your own self-assessment without getting fined by HMRC.